All right. Good morning, everybody. Happy Tuesday and welcome back.
All
Making
right.
sure we
Good
are
morning,
all set
everybody.
here. Things are looking real good. Happy Tuesday and welcome back. Just double check the audio on YouTube, but I think we're all set here. So I'll go ahead and get started. Even Carlos is highlighting my shirt on YouTube. So looks like it's going to be a fun session today, which is appropriate. Um, Ultimately, not too much to discuss from yesterday's activity. We'll start off by looking at the week ahead. Obviously, big earnings week. Just kind of reiterating what's on deck each and every day. Plenty to look at this morning. A couple of key uh, industrial names, some consumer staple names have come out with their earnings. We'll look at their expected move and talk about some potential opportunity if we see clear breakouts or breakdowns in those names. But let's start off with the big picture here. We are in one of the heavier earnings week. We're looking at about a third of S&P companies having reported by the end of this week. So lots of stocks on deck. And of course, the couple of names we've gotten so far over the past 2 weeks. So as we're looking at Tuesday, and we'll start off with the before market open names. Keep in mind, this is the trading terminal. We're looking at the calendar section and we're sticking to the earnings tab. We are looking at market cap weighted names here. So I've sorted by the largest market cap for earnings this morning. And starting off, we'll look at Pepsi. We have stocks like Novartis, not one that we often look at. UPS, HSBC, so large sort of international banking conglomerate. RTX, General Electric, 3M or Triple M. And then as we go down the list, you'll notice the names become slightly less familiar. We might take a quick look at Sherwin-Williams, mostly as an example of what you don't want in an earnings related stock. So let's start off our review with the likes of Pepsi. We'll just knock these out really quickly. Always good to see what the market sentiment looks like relative to location and to trends. So Pepsi coming into its all-time highs as of late. We've seen a lot of relative strength in consumer staples, and Pepsi is one of the larger holdings of the consumer staple ETF. The daily chart itself looks like a very strong reversal off of a sell swing back in February and March. And we're looking at essentially a forming cup and handle. If the market were to break its all-time high, i.e. with some sort of earnings catalyst, that would be a very powerful signal because the technicals are already set up to do so. We have a nice sloping move back to the high, and then we've pulled back slightly after testing it so far. We've also seen, if it was any other day, this type of volume reading on the pullback, especially at support, would indicate that this market is likely to head higher as it is trying to trend and all of its key moving averages are in line and sloping upwards. So that's the technical picture. What we have for earnings that helps us get a little bit more edge is what is the option market pricing for Pepsi. So we often want to look at the short dated option series. Keep in mind that this is for Friday. So the expected move here is not necessarily for everything in earnings itself, but a lot of the volatility represents what the market is pricing for this binary event. And of course, there's going to be some tail end movement throughout the rest of the week. So one thing you want to pay attention to is the expected move. Now, Pepsi closed at about 173.7. The expected move at close should have been about 5.5. And what that represents is if you're looking at the money pricing, so an at the money straddle, you're going to see that these are priced approximately at about $5 to $6. This is slightly under the close, so you might have to take a little bit of an average, maybe centered around that price. I'm going to just grab like the 170s here, about 580, and the 175s about 470. So the average is somewhere around $5 to $5.50. That is what the expected move represents. And what you're also looking for is where is some of the higher open interest, because as of this morning, all of the volume from yesterday and all of the open positions that were remaining allocated to this stock are going to be represented and calculated as open interest for today. The market's not open, so there's no volume showing today, but the open interest shows where has the money remained for this catalyst, for this binary event. And you'll notice some higher interest at 170, 155. You can even look on the call side and say, okay, close to at the money kind of stands out, and it tends to sort of drop off as you go higher. Now, what I usually do is just say these are psychological prices. It's where value sits in the option market. And you can make some slight assertions as to whether or not that's a more bullish set of open interest. You may have to look and see how that is positioned, usually by looking at either time and sales as they're placed or some aggregate service that shows what sort of spreads were opened up. But overall, if you're looking simply, you're only looking at this to say this is where the big money has remained in the stock. And at least for Pepsi, we have enough open interest near that swing high. Remember the breakout level about 177.25. We have enough open interest there that if Pepsi goes bullish at any point this week, there's enough value here to facilitate a move to these levels. And if we continue to see buying, especially if this evolves over the next couple days, anticipate the idea that a breakout could be setting up based both on the technical picture and the fact that the earnings themselves were, well, they haven't come out yet, but whatever the reaction is for earnings. This is one of the few that didn't come out quite yet. So, and just repeating that cycle, what I've just shown here is sort of the full gambit of what you can look for earnings outside of what is the stock and what is your expectation. You often want to pair this with what is the market's expectation and how can you use that information both into earnings and of course after if you're trading the reaction. So shifting back to the trading terminal, we'll look at UPS, RTX, and General Electric next. So Raytheon, once again, relatively strong stock. You want to be looking at which stocks in this market are making new swing highs as of late. That's definitely standing out from the downside volatility in the market. But what you'll also notice is that RTX is a bit overextended, at least from historical readings. If you tag this particular resistance, it tends to be an inflection point. And RTX tends to have a hard time breaking it, both on larger sell swings. This is, of course, some volatility before before COVID. And then if we look back about 10 years here, we can see that some of the seller swings have started from these levels. So the question is earnings going to change this technical picture, or is what's been working and the simple idea that RTX might be considered a bit overbought in these price levels and has yet to really breach this relatively flat resistance? It's kind of slanted to the top side. But all that said, what is earnings giving us today? Well, RTX closed approximately at 100. And what we're seeing is that in the morning, the reaction so far is slightly down. Now, RTX did circle the drain to some degree yesterday. We had sort of an intraday recovery closing near the high of day. Lots of lower volume pre-market readings so far, and the earnings themselves look to be a beat. Obviously, not having digged in too much, but overall the EPS readings are above what the estimates reported. But what does the option market say was the expectation of movement before this information was known? Well, some interesting readings. We have about $4 to $4.50 of expected move. Once again, just looking at how you get that number, you want to calculate an at the money straddle. So a 99 straddle, call and put, about $4. $100 straddle, about $4. You can go a little further out here, but you're starting to move away from the close price. All of this is saying about $4 for the week. That's pretty close enough in regards to option pricing. What you'll also notice is that a lot of the open interest here happens to be about $4 away from the close price of yesterday. Some 102, 103 stand out on the call side, maybe some bit of a spread or a little bit of a buy and call premium. Buy and sell call premium on the open interest side. And then, of course, 95 stands out pretty heavily on the put side. So from the option market perspective, this is where, so far, a large portion of value tends to be set. You can often pair this with future series as well, but just keep in mind that we are looking short term, and most of that open interest is going to be centered in that weekly series. So you'll notice just 1 week ahead, there really isn't a lot of open interest in this name. So as we shift back to the weekly series, obviously looking downside, we'd want to look at 95 as a big relative target for the stock to hit. And then upside, a break of 100 could lead you to the 102, 103 range. And usually what I like to say is if you have open interest similar in size and often close in strike, what can that do for the stock short term? You can often run to the top side, which in this case would be about 103, and then you'll see a little bit of a struggle and often some consolidative action between 102 and 103. That would be, of course, the best case scenario using these types of readings that we've seen so far. So is RTX bullish? Arguably, the daily trend is still relatively bullish, a bit of a slight violation of trend, of the uptrend, because we did have to test the swing low on yesterday's volatility. We're also at a pretty poor technical area for RTX, at least from the long perspective. Breaking out here would be uncharacteristic of the stock. So will that topside move happen? Short term, absolutely. We can get up to that 100 price, maybe go a little bit higher. It was only there a couple of days before. But downside, be looking at that 95. If the market breaks these levels, the idea here is that not only is it a break of trend, but it's also an earnings value play. And that's where you're combining multiple ideas into one stock. So let's keep moving forward. UPS recovery, like most of the market yesterday, slight bounce off of a potential breakdown. So breakdown with the lack of follow through is often what I like to say. The low was set back on, it's like April 8th. And then of course, yesterday, large volume and recovery move on the intraday to swing it back into its earnings. So closing at 190, pre-market high at 196. You'll notice that UPS actually has a lot of volatility into its earnings. For a $190 stock, they were pricing in about $20 of movement. We'll just say 18 to be a little bit more precise here. Once again, just looking at the 190s, does that match? Yes, it does. About 17.50 for an at the money straddle. Where's the open interest? In this case, there's a bit of a centered area around 177.5. So looking downside, we're looking about $17 out, especially from 190. In this case, it would be 175 would be about $15 out. And then, of course, if we really get going, 170 would be about $20 out. Same idea topside, but you'll notice that the open interest is simply laddered. And what this means is if there is a bull move, especially in the magnitude of $5 per movement, the option ladder facilitates that type of movement. You want to be thinking a little bit like how level 2 works in regards to what the option market can do for providing upside inventory. And what you'll often see on Bookmap is, one, these are psychological prices. They're every $5. So yeah, they tend to stand out a little bit more than others. But the option market itself has open interest at these levels. Especially, you'll notice the highest one at about 205. So if UPS goes bullish today, the technicals short term represent a bit of a false breakdown. So usually what I like to do is say, what is the highest price level after the low has been set? This low was established, it was tested, therefore set, it was attempted to breach, and a lack of follow through. So can we simply get back up to the swing high? I think in most cases, absolutely, especially with the earnings. And what you'll notice is that the pre-market already got us there. Now what we're looking for is any continuation, and in this case, a move potentially to 200 to 205 long. Downside, of course, into that 177.5, bit of a balance area between about a $5 width in terms of price. GE, same idea. Anything to really glean from the technicals? Not really. Overall, the stock tends to be choppy. The weekly doesn't paint a very clear picture, but you can see that there's sort of a natural drag to the downside over the past year and a half. The stock has not been moving to the top side to any degree, and overall, we'll just call it sort of a slow and steady downtrend. Now, what does the option market say for earnings? Closing at about 90, and we're looking at about a $5 to $6 move. Again, does that match what the pricing was yesterday? Yes, it does. Looks like about $5.50 to $6. Even that mid price is pretty much right on the money. 85 and 86 do stand out. Once again, similar in price. So if we go bearish, probably expect some balance between those two prices for a period of time. If we go bullish, $5 out, 95 stands out. Very high open interest relative to other prices, which are also fairly high, at least in the case of looking at 4 digits instead of 3. And then, of course, if we're really optimistic to the bull side, we'd be looking at things like 98 to 100, with 101 for some reason standing out much higher than 100. So what's great about this is we kind of know a little bit about the reaction so far. GE had a little bit of a sell. EPS did the estimate. The reaction itself was bearish. So regardless of our idea of what the market should do, the numbers were all evidence, the actual technical moves, what the market actually price, how to help us for those ranges until that inventory starts to move away from the market. And I think last, in regards to earnings, one that you should not be using this method for. Let's look at Sherwin-Williams. So relatively known name. It's not like people don't know what Sherwin-Williams is. You know, paint provider, tends to have some sort of home builder slash home improvement vibes in regards to how it performs. Pretty nasty sell swing since the beginning of the year. Pretty much most stocks who have sold off heavily started their sell swing at the beginning of the year. And what's important to note is that this was a really strong uptrend before that sell swing. So this particular market sold off hard. We got a weekly bounce going, looking more or less like a weekly bear flag, big picture. And of course, what we're looking at for earnings is anything really going to change? Now, pre-market doesn't give us too much. You'll notice that the volume here is relatively light. Whatever the numbers are, looks like a slight beat, at least for EPS purposes. But overall, looks relatively like it's going to the top side. Now, the question is, can you apply these same techniques in the option market? And what you'll notice here is that Sherwin-Williams does not have the same option market that we just looked at across these other names. For one, there's no weekly series. So in terms of short-term pricing, it's pretty challenging to get an expected move using something that's out 24 days in time, as opposed to 3 days in time, which we saw with the other markets. You'll also notice as I dig in here, pretty light in terms of open interest. Even some of the highest readings are more on the scale of a couple hundred as opposed to a couple thousand. And that's indicative of the type of stock this is. It tends to simply not trade a lot of option volume. So overall, even though 1,275 calls traded yesterday, that was about 2.2 times higher than the 5-day average. So normally the stock trades about 500 or less calls in a day. And into earnings, what you want to basically say is that there's nothing really of note for this stock from the option market. And it's also a really poor candidate in regards to playing earnings. You don't have a short-term series. And if you're playing further out in time, you're probably looking a bit more macro or maybe technical in nature, not so much the actual earnings itself, the actual movement from earnings. So it's a great counter example to what we just did, because not every stock has those qualities. Only certain high liquid, usually S&P, NASDAQ, or just names that you're familiar with will have the option market available to trade earnings in that type of way. And that's both true for into earnings. It's also true for after earnings. So wanted to highlight that because it is a stock in play today. You know, there's probably nothing wrong with trading a stock like Sherwin-Williams today. It moves just like any other stock, but you can't apply the same techniques. It's a little different overall. And what I'd instead be looking at is just your pure technical approach. Sherwin-Williams recovered yesterday, bit of a downtrend starting to form, recovery off of yesterday's bounce, and then of course trading in the 260s. So putting some short-term pressure on bears, that established bearish positions, into the short for earnings. So that natural technical analysis that we all know and love. Okay, so that's our earnings for today. Circling kind of back, the S&Ps did recover yesterday. Mild trend line support. I had this marked off after our session, so I did want to highlight it. Just a kind of natural rising trend line, and this is off of swing lows from February and March. Remember, all I'm doing for a trend line, imagine that this price action does not exist. And all I'm doing is connecting the first swing low that touches my trend line and expanding out. So nothing magical about this trend line. The S&P had a bit of struggle. You know, we did breach it lower, but of course, big picture here, the market is still trying to hold and hasn't quite yet breached that swing low back in February. Massive rally off of the gap down open. If you recall yesterday, I said the market is likely to be changing in the short term. We're going to see typically some of the most bullish days on gap down opens, and we're often going to see 10-point swings in the S&P. So guess what? Both of those happened yesterday. We had pretty much exactly what was projected based on the volatility readings from a historical precedent. So this is the type of trade that we should be expecting for the rest of the week, both with earnings coming in, along with the volatility readings that we have. VIX did come off slightly, that 30 inflection, still providing some guidance here. But overall, we want to just kind of monitor this because the VIX can easily stabilize. We can see larger, basically buy swings inside of volatility. And as far as the VVIX is concerned, I often want to look at some of the largest inflections here. Where do large market participants tend to say that the selling is over and look to buy the market? Well, we had a very mild swing. We are pulling back slightly so far, but we're not really at an extreme. So the market would need to put together a better case for a long because the volatility is not quite confirming it yet. So large, recovery in the SPY. The Qs had a stronger overall day, at least from their percentage movement. You'll notice that things like the yields are coming off slightly from that 3% inflection. That was at least an intraday driver for some of the tech strength. There's also earnings to consider, so keep that in mind. There's a lot of factors into yesterday's recovery. And then, of course, as we look across the board, this is pretty much most indexes. The IWM bouncing off of its range low support. Once again, this was established back in time. This is January 24th lows. We haven't had a close below this print. So far, this absolute extreme is holding. But what you're going to see is that there are breaches. There are moves below intraday before basically the turnaround truly begins. So this is mostly the idea of risk. This market tends to have at least some testing behavior, some downside play into these levels. And then from there, you can often get what I often refer to as return to the mean style plays. IWM is a classic because there's a high VPOC above. And now that we've been trading in this range, guess what? There's another one. It looks exactly the same. And if you zoom in, you're going to see the same characteristics here. Let's give it 30 days. Let's give it 90 days. The characteristic here is that the VPOC centered around 200. It's a trading range. So most trading ranges have low and high definition. They tend to have up thrusts and down thrusts as they stay within the trading range definition. And usually there is a center price. That center price is value. It doesn't have to be in the center of the range, but IWM is probably a very classic example of what it should look like from a volume profile perspective. And last but not least, let's always take a quick look ahead at what's on deck. So as we shift into aftermarket close, Microsoft, Alphabet, Google, Visa, look at the market cap here. This is very important. These are very large relative market caps. And compare that to what just reported. The likes of Pepsi, half of Visa's market cap, UPS, even less, and the list goes down and down. The impact today and into tomorrow is going to come from these types of companies. So after hours today is going to be quite interesting to observe, mostly because we're going to have key names reporting and the expected move from these names will be shaking up the market. So use those techniques today to place earnings trades if you're interested. Keep an eye on what the expected move looks like. For Microsoft, for example, you can look really quickly, about 17 bucks right now. That's likely to go up a little bit today. And just keep in mind that this is going to be what's affecting the market after hours. So with that said, my name is Jared. This is Engineering the Market. Stay tuned for pre-market prep, and we'll talk more tomorrow.
All right. Good morning, my friends. Welcome to the pre-market prep. I hope everyone's having an amazing morning. Hopefully, you guys had an incredible day yesterday, although I know that was tough to do with the way the markets was trading. Good morning, Norm. How are you doing today, my friend?
Hey, good morning, brother. I'm doing well. How are you?
Doing good, man. Doing good. Let me just get my volumes right because I got you a little bit low, but I think it's on my end. Just want to do a quick check real quick. Just say something, Norm. Let me make sure the volume is good. Hmm. No, I can't hear you now.
I'm just messing with you.
I'm like, wait, what's going on? We just had this. All right, now you're coming in good. Excellent. Um, all right, guys, let's get to it. Let's look at some stuff we had on our list yesterday, starting here with Twitter. So Twitter, obviously, a lot going on there. Had a nice pop-up yesterday with the most recent news. But man, it was so much chop yesterday, and I kind of expected we were going to get some kind of day. But yeah, we're looking pretty good here as the volume now. Andrew's saying nope, nada. And he's laughing over there on the YouTube chat. Okay, so again, just look at the pre-market. The pre-market was not pretty. We had volume, but it just didn't look well. And you can see here how choppy it was. You did get a couple of breakouts here. Some nasty price action too, guys, right? You got these pops here with it immediately selling back down. Another one here. This took a little bit longer to sell down, but look at the just the crazy pop here, 51 to 52. So you have to be very quickly.
Yeah, that's
I'm
when the
sorry.
official word came. I think that's when the official
Is
word
that?
came out, right? Yeah.
I think it was, yeah, because there was rumors about it in the morning, and that's when it officially hit, right? So it's just an
Yeah.
insane pop there. Again, just very very rough action on Twitter. Here was Axios. Well, actually, looking at it now, actually had a decent trending down day, but just not a beautiful start, right? So, and that's a theme throughout a lot of these. You're gonna see that they did not have the best start to the market open yesterday. You look at Tesla. I mean, just look how choppy this was, guys. Every candle overlapping the previous candle. A little bit of a run here, which was not easy because if you look at these wicks, the minute you get a pop up, it pushes right back down. So very tough to be convinced that this stock is going to trend, right? Very tough to do that. And once it gets to this range, it just stays stuck at this range here, slightly above the VWAP at one point, and then just wrapping around the moving averages. Here was Netflix. It was a great short. Netflix turned out really good here. Beautiful drop there. It continues to struggle. We broke down from that 210 we were holding, so now the new low at 205 or so, and you had a nice little bounce there throughout the day. Here's NEO. Look at NEO as well. Every candle overlapping the previous one. Nothing to see there. And look at Apple. Same situation. Just a lot of indecision. I actually went short here thinking we were going to sell off, and this was when the market was selling off. Made a very, very small profit, got out at break even, and glad I did, because look at the squeeze back up to the VWAP. Again, it was just a very, very tough day. So if you didn't do well yesterday, it was not you, it was them. Okay, it was the market. It wasn't your trading. It's just one of those days where things are not as smooth. Norm, I know we have a lot of earnings this week. What's the latest and greatest, and any notable earnings coming out this week?
Well, yeah, lots of them.
Yeah.
So data, we had durable goods and capital, core capital equipment orders at 8:30. We've got the S&P Case-Shiller Home Price Index and FHFA. I cannot say that unless I do it really slowly like that. Home Price Index, those both coming out at 9. Consumer confidence and new home sales at 10. So some data coming through today. Like you said, we're in the heart of earnings season. We've got some really big ones this week. We've got Microsoft after the bell today. We got Google this week. We've got Apple this week. We've got Amazon. I think Apple and Amazon are Thursday off the top of my head. I mean, just they're earnings galore. So be sure to check out Ed in his mentorship 4 o'clock. I'm sure he'll have some great things to trade, and that's in the main room. But his after hours stuff in his room as well, on days not starting with Thurs. So yeah. There you go. So yeah, like tonight you've got Microsoft, Google, tomorrow Facebook, PayPal, Boeing, Apple, Amazon on Thursday. You're gonna have some good stuff coming out the rest of the week.
Yep, some really big names. Someone in our YouTube chat was asking, what's a good website to come and check for news. One that I use is Benzinga, but you can also come here to tradingterminal.com, and you can get news right from here as well. So if you click on the news, this is the website that we have put together here at Bearwood Traders. Very, very clean website, guys. No ads whatsoever. Very clean cut. You don't have pop-ups coming up left and right. So tradingterminal.com, guys, check it out. You can scroll to the bottom here. You can look at the news overall, and then you can look at something specific, right? If you're looking at, let's pull up Twitter, which seems to be, just
no, there's no news on Twitter.
Why would they be, right?
Nobody's talking about that.
So here you have your Twitter action, a couple of analyst recommendations. So again, just overall data, which is real nice. Again, you can get your news from so many different places, but I keep telling you guys, this is the cleanest structure I've seen. It's a pleasure to come in here and just get what you need, right? You got some Twitter news on here as well, so you can take a look at that. So again, pretty neat. Definitely take a look at it. Real nice. All right, cool. Let's get to our gappers list, guys. Our gappers list this morning. Not a whole lot going on at the moment. You got a couple of things in the green, a couple in the red, and we'll dive into what some of these are. Some of these names I'm not familiar with. DWAC I know is the other Social. Twitter. What's the name of it?
Truth Social is part of it. I think there's more than just that, but that's the social media platform.
All right. And I mean, it's so tough with social media, so much competition, but somebody somewhere thought that this was going to be a good idea to go up against Twitter. I just don't know how.
A lot of people have had that idea, just none of them have worked.
Right. It's a tough one. It's a very, very tough one. Twitter's got a hold on the way it's set up nicely. And to get people to switch from one platform to the other is very, very difficult. We know that. All right, you got JetBlue here on the gap down. GE, NKT, FTX. This was the low flow for
Yeah.
for yesterday. That was hot. It is down 6% this morning, still at 17 though. So that means we must have ramped up to at least 20. We'll take a look at what's going on there, and we'll see what's good for today. So let's get right to that, guys. I missed to say this earlier, but if you haven't done so, hit that thumbs up over for Jared coming on every single morning. And if you were not on that early, I will scroll back on the YouTube, and you definitely want to check out the shirt that he was rocking this morning. You definitely want to look at that. It's real nice. I should have taken a screenshot. If someone has a screenshot, send it to me. We'll share it with everyone. So if at least give a thumbs up for the shirt. With that said, guys, let's get to it.
I couldn't pull it off.
Me and you should do that Friday. I don't have one, so I have to go buy one. But let's get some flowery shirts. I know Andrew has one or two of those. We've seen him do it, some videos on that. We got to step our game up, man.
Andrew can pull off a burlap sack, dude.
Yes, absolutely. All right, we are all set to go here. Let's start with deleting our rows. Control A, Control X gets rid of. Control A, Control X gets rid of that. Wow, that's doing it a little weird today. Control A, Control X. That's strange. Am I doing something wrong? I'm not sure why it's doing it like that. Usually deletes everything, but okay, we'll delete these two manually.
Tesla and Apple are apparently on our list today.
Yeah, right. They did not want to come off. I'm going to keep them there because there must be something going on.
Being forceful about it.
My platform is telling me keep these two on no matter what. So let's look at Tesla. Let's look at Tesla right now. So Tesla at the moment, again, not doing a whole lot. Volume actually very light. Yes, we're not going to keep Tesla. It's not looking great right now. Sorry about that. Apple is, Apple is good. I want to keep Apple on here. They have earnings coming up later this week, so that will be interesting. But the last 2 days, we've seen an incredible amount of volume in the pre-market. Yesterday was like 1.5. Today we're seeing 1.7 million. So the volume is there, not clean trading at the bell. The daily is very interesting. I definitely want to see what's going on here. And if we find something better, we can always take this off the list, right? Let's see what's gapping up today. We have MX. MX this morning up 21%. Not a beautiful pre-market activity by any means. Only 300,000 shares traded. It is not a low flow. Sitting at 43 million.
No.
Many good stuff. Yeah.
No, not good stuff. This is a semiconductor company based in Luxembourg that's being bought out by a South Korean firm.
So this is the buyout here. So yeah,
it is, and it's not moving like a traditional buyout. I skimmed an article or two on it. I didn't see anything specific on the price or cash or stock or what it is. This has been on the list once or twice over the last few years. Stocks out of Luxembourg generally trade like horrific garbage. So, and it's a buyout. So those two things combined kind of tell me it's worthless.
Yeah, I agree. I agree with that. We'll skip on that one, guys. Let's go to ATER. I believe we've seen this one before. Today they're up 9.2, 1.6 million shares traded, although the pre-market activity doesn't look like it, but it does quite a bit of volume here. Lower price stock. It was hot. Oh, I remember this. This was hot a couple of days ago, and it held this pop here. So they're back at it again. There was some okay trading on this. Not a low flow stock. I'm going to put it as a possible. I wish the pre-market activity could be a little bit better, but it might get going just after the bell. Possible for now. GLW, this looks like a buyout now. You got a nice little pop here and going sideways, or at least, something of that nature. The volume is not quite there, though.
And earnings this morning.
Earnings, and this is Corning Incorporated.
Yeah, Corning.
Yeah, so not sure what they do. Up 8.1 right now. Not looking too hot at the moment. I'm going to skip on it, guys. If it gets better, you can throw it back out to me. ZIM. This one is popping up 3.5, 150,000. Normally this stock doesn't get a whole lot of volume. Is this earnings too, Norm, or no, this is something else? Not sure what's causing this pop this morning.
I don't really know what caused that pop. I haven't seen anything to justify it. It's a shipping company out of Israel. And I know that there was another container shipper that I believe had earnings this morning or a pre-release. And said some things that might have been what caused them to move a little bit. That having been said, the shipping container companies can move wildly, even if they're not low float when they do have news, but they can be really tough to trade. So
Yeah, I'm not
Merce,
really. Yeah, not really liking this one, so I'm still away from it. I feel agree. That's a nasty 1.7 on the one we saw earlier. I agree. DWAC today. So DWAC is up 3.3. We've seen this gap up or down. I don't think I ever kept it on my list, at least not as a main one, maybe as a possible. Today's pre-market action is not looking great. Very light on volume. Again, as you can see here on the daily, they have not been having a whole lot of fun. It's just not sure on this one. Not really sure. We can always come back and take a look at that. We'll put it as a possible for now. See what's gapping down this morning. NKTX, the low flow that was hot yesterday, guys. This thing went from gapped up from 8 to about 14 at the market open. Ran up to 19 throughout the day. Looks like a 19 something there. Almost 20. Yeah, 20 actually after hours, right after the closing bell. You know what? It could be interesting today. It hasn't fallen off completely. It's holding somewhat here. Maybe another test of the 18 and 19. Usually the second day is pretty tough. I don't recall the catalyst, Norm. I think you mentioned it was something with cancer yesterday.
Yeah, it was a cancer treatment. I think a phase 1 trial, if I remember correctly.
Yeah, see, and this is what I think about these phase 1 trials. You kind of get the momentum going, but then you come back down because then you're gonna wait for the next trial. You're gonna wait for the phase 3 or 2, whatever is the big one. I think it's 3. It's just I don't know how the phase 1 continues on carrying momentum here. So we'll put it as a possible for now. It needs to get going towards the top side. If it doesn't do that, then it's not really going to be in play. Do you see PH this morning? They are down 3.7 at 563,000. We've seen this before. It just doesn't trade very well. It doesn't really get good volume. This morning they're seeing probably a quarter of the volume they do on a regular basis in the pre-market already. So maybe today is a whole different type of animal, different type of trading. I'm not sure what catalyst they have running. Earnings is not until next week. So
it's another pharma company. It had news on a preclinical trial, a small cell lung cancer drug. They had a big move and then have given a lot of it back. So I'm not a big fan of this one.
Yeah, me neither. So yeah, I'm gonna skip on this one for now, or just not for now. Period. Here's GE. GE's down 4.1. So what's going on with GE? They're showing some movement here.
They had earnings.
Earnings on
It's
GE.
GE.
I know. GE's 86. I thought GE was a lot less.
They did a reverse split.
Oh, okay, that makes sense. Yeah, because they were down at like what 20, maybe even lower, right? So
Still trades like hot garbage.
that hasn't changed, right? So no good here, guys. We'll skip on this. JetBlue airline gapping down today, so I assume they have their own individual catalysts.
In our earnings this morning.
Okay, there we go. Earnings on JetBlue down 3.3. But this is after they gapped up, right? They gapped up on American Airlines news here on that catalyst. So I wonder how much of that drop is already baked in, because we did lose some stuff over the last couple of days. So this might not really be in play today, even though it has earnings. I highly doubt it will trade well.
Not the greatest trading airline usually.
Yeah, I don't think it will trade well. So we'll put it as a secondary, but it might not even stay there. VREU, I know this was hot a couple of days ago, and it has somehow maintained above 11. This thing was trading at $4, guys. We had the nice pop here. This thing went up to 15. It was a great one, and then we're holding. Good day yesterday. Maybe a possible continuation. If I remind myself, no, it's not a low flow. It needs to get better though, but it has potential, and I do like the fact that we had the initial pop here. I think this is the one with the COVID pill or the COVID 55%.
It's an oral COVID treatment that supposedly drastically reduces death.
Yeah. So again, it's good catalyst. Let's see what happens here, especially with what's going on over there in China and the madness that we're hearing about. We'll see. We'll put it as a possible for now. It needs more volume for sure. Had a good day yesterday. Can we break out of 14 towards that 17, 18? That would be nice. Last one on the list. What happened?
Jonathan's reply to my oral COVID treatment that dramatically reduces death. He asked if it was bleach.
55% reduction in
Pretty
death.
good.
Who knows? WDB this morning, this is Warner Brothers. They're down 2.2. Again, a lot of these companies, their streaming services getting killed. You're seeing that here. Down 2.2 this morning, 353,000. They do not trade very well, but look at the last couple of days. They've seen a very high increase in volume. Not sure why. Maybe because of Netflix?
This is post-merger for the most part.
CNN
CNN splitting off and all that. And then you, of course, had the news of CNN Plus, that streaming service.
Yes.
They spent like over $250 million working to launch over the last year and hired a bunch of people, and that didn't even last a month. So...
Okay, so that was going on there. Yeah. Again, not a great trader either way. So I'm not too inclined to add it to my list immediately. Can we look at it as a possible maybe? Wow, not a whole lot today. A lot of possibles, nothing that looks really great that's sticking out as a good stock to watch. I have Apple. We will probably watch Netflix because that's gonna be fun and hot for some time. Although right now the volume is very light, but I expect that to change. We continue to try to hold this 210. We tried that. We're not able successfully to hold that yesterday. We did below that all the way down to 204, 203, came back to 208. So let's see what Netflix does here. Maybe there's some more downside to this. Who knows? And it traded very clean. I should have focused more on Netflix. It was a very clean drop towards the downside on Netflix. Good continuation there as well. Norm, anything that you like? We don't have a whole lot right now.
Not especially. I'm hoping we get some more things that pop up on the list. Somebody mentioned UPS. That was one of them that's possible. It's not great now, but it usually doesn't trade very well in the pre-market. It's a nicey stock, so sometimes it won't trade well at all, but they had earnings this morning.
Yeah. I'll add them on here. We don't have a whole lot, so we definitely have room for UPS and see how it goes at the market open. Getting a little bit of a pop, but you mentioned it right. Market open is going to define how much volume and how great it's going to trade.
I'm going to regret doing this, but F for Ford, because people know that I hate trading Ford, but they did increase. So they were originally planning to release 40,000 F-150 Lightnings in the next year, and they've upped that number to 150,000. So over triple. I'm curious if that does anything or not.
Yeah, that's a big pop there, or a big change in numbers and forecasts. So yeah, we'll see what it does. I mean, their daily is primed for a pop here, by the way, too. I mean, look how nice this looks as far as a area of support, right around 15 here and 1450. Every time it's been here, has found a little pop. So maybe it could be good time for a catalyst like that to come in and get a little pop going. So we'll see. All right, let's take a look at our moderators lineup. We didn't look at Twitter. What is Twitter doing this morning? I know we're going to watch it.
I thought you looked at Twitter.
No? I probably forgot to add it maybe. We'll do it now. So here's Twitter. 2.2 million shares traded right now. So looking pretty good as far as volume. Again, it's some weird trading. It needs to come down a little bit,
I think this is dead.
Yeah, you think it's done?
I mean, this is essentially a buyout at this point. Some people asked, why isn't it at 54.20? One caveat to it being dead, and that is if some other drastic news comes out, either somebody trying to outbid Musk, or that the deal's not going to go through. One of those might change it. Other than that, I don't think there's going to be enough range to trade it in. It's essentially a buyout. It is a buyout, taking it private. So, the reason it's not at 54.20 is because there's still risk in the deal. Whether the financing doesn't go through, or Musk, it could be anything, but there's still some risk in the deal. Plus, even if it was like 100% done deal, it still takes it still takes time to do an acquisition, buy a company, and for it to actually be taken private. So if you paid $54.20 for it, why would you do that? Your money's just locked up. It's essentially you're just wasting capital sitting there doing nothing. So when you have a buyout, it really never goes to that price until the deal's done. It usually sits just below it a few percent.
Yeah,
It might
yeah, just
trickle
in
up.
case something falls off,
Yeah.
right? Right. I mean, who's going to join in at 52? You're going to tap your money for $2? It might not be worth it. Now, if we're sitting at 40, 35, it's a whole different story, which normally you won't do that because obviously look where we're sitting at now. So yeah, completely agree with you there. All right, we are all set here. BRBR, welcome to the YouTube chat, my friend. He's reading Andrew's book and found his way to our YouTube channel. So excellent. Hopefully you're enjoying the book, and welcome to the chat. Let's see what we have, guys. What do you guys like today? We'll start with Kevin B. Microsoft. What times they report? I believe is it today? If it's today, is after hours. It's just says after hours today. So
yeah, it's after the close today.
After the close today, so there'll be a set time, but usually they don't stick to it most times. It could be a little bit after that. Here's Oxy at the moment. We return to value. I'm not sure. I think it's lost some momentum as far as volume and volatility in the last couple of days. Right, it's not the same stuff we saw over here back in February and March. Obviously, March was just insane. So you lost a little bit of that. You really got to wait for the market open. I noticed that the pre-market activity is not great on Oxy for the most part. Market open, you can get some action. We'll put it on here for now, and then we can always come and check on that one. So Enrico, Mr. G, Lavi, yeah, Oxy's good. We'll put that on there. Giving us BTU, pretty quiet. Only 58,000 shares traded, and for the most part, it's just not looking good. So I'm gonna skip on that one. Doesn't look like it gets great volume neither, right? Under 10 million for the most part in a couple of days here. So I'm not a big fan of that one. AMD, how did AMD end up yesterday? Man, just look at the oh no, I'm about to say this is not AMD. I'm like, this is nuts. This is horrible. All right, that's not AMD, guys. Hold on, let me get the right ticker in place. It's not any better, but at least there's volume. At least there's volume, because that other stuff I was looking at, I'm like, wow, that cannot be AMD. So yeah, I think AMD's daily looks very interesting, but I think you have to look at the overall tech sector, right? You got to look at the Qs and see if there's any kind of pop. Just have a lot of chop and indecision at the moment. And I think a lot of that is because all the tech companies are reporting later during this week. I think we really have to wait for those earnings to come out to get back to some normal trading. The stuff we saw yesterday is not the way tech has been trading over the last couple of days, right? So that was brutal. So yeah, you could watch AMD. I'm going to keep Apple. They have more volume. We'll take a look at Billy this morning. Let's see what's happening there. I don't see a lot of Chinese stocks on our gap down list, and the reason is they don't look good. They don't have volume. Here's Billy. Just not a lot going on this morning. I don't really think it's in play right now. Could it do something at the market open? Yes. But at the moment, not worth having on our list. I think Disney might be quiet for now. I think you had the issue with Netflix coming out and all of that. I think you just might go sideways. When do they have earnings? Did they have earnings already? Disney, no, that's next month. So next week, actually. So or 2 weeks from now. So I think we have to wait for that. I don't think it's going to do anything in the next coming days until their earnings, unless something else happens in that streaming world. Roblox. RDBX Roblox is on the move. Oh, no, it's not Roblox. This is Redbox. This is Redbox. No, this is yeah.
Close.
I don't know if right. I don't know if this is any good. I mean, it's moving now, but what can they possibly be doing to earn this move? I mean, this business, I don't know how they're gonna stay afloat at all. RDBX. We'll put it here. We'll come back to that.
I'm sure they're gonna try to reinvent themselves in some way. I don't know what.
They have to. They should have done that years ago. But yeah, you're absolutely right. Here is Neo. We'll take a look at Neo. Neo, not looking great right now. Sideways for a bit. So I'm not going to add it just yet. Let's take a look at our YouTube chat, guys. What do you guys like this morning? So we have ATER. ATER, I have on here as a possible.
Yeah.
We looked at that, so we'll have it there as a possible. RDBX, yeah, Ben, I know. Disney we looked at. All right, so you guys are throwing some stuff that we already took care of. ZIM we looked at as well. I'll take a look at this one. GMDA. We have not looked at this one, and this is just what I don't like this at all. Look at this pop here. You're getting initial pop, and then you're just kind of selling down. This is horrible. Stay away from this unless something else comes up where you start hitting this 380 and 4.2 again, 420. But here it's done. I mean, whatever this is completely done already. So this is trading like garbage to me. Be very careful with something like that. You might get a lot of fake outs and just right back down. People that got in very early, the early money is dumping on you guys here. So just be very, very careful. All right. We are all set, guys. Let's go to community events and announcement for the rest of this week and what's happening tonight. And then we'll come back and fine tune this not so amazing list, but hopefully we'll get there.
Yes, technology webinars. All right. Last night's webinars should be posted soon. Carlos talking about using scanners and news alerts to find trading opportunities. Then next week is Kyle's every other week DAS trader question and answer. And he'll also be talking about the new beta 5.7.0.1 overview. It's at 8 o'clock on Monday. Then tonight, note the special time, 5 p.m. Because of his time zone. And guys, if you haven't seen it, now don't leave the YouTube feed right now. But once we're done, go look at the channel and look at his new thumb. He's trying to pick up chicks on YouTube, I think. Parabolic Reversals, 5 p.m. this evening by Eamon. And then Artie next Tuesday, 8 p.m. Eastern, Implied Volatility Demystified by Artie. Yes. Yep. 5 p.m. Eastern tonight for Eamon's, correct. Tomorrow night, Psychology with Mike, talking about fear of missing out at 8 p.m. And then next week, Dr. Kenneth Reed is going to be talking about the humble trend line. So that'll be at 8 p.m. as well. Don't forget about mentorship on Thursday at 11, 4, and 8. And also stocktradingsimulator.com. If you have not checked it out yet, you can go there and use our free web-based trading replay simulator. You'll also get a couple of homework assignments a week. Speaking of the man with the great thumbnail, Eamon, he'll be sending those a couple of times a week. They usually come out on Wednesdays and Fridays to help you get pointed in the right direction of what stuff to look at in that replay simulator. And if you're watching on YouTube, haven't tried out the chat, you can go to bearbulltraders.com, scroll down about halfway down the page, you'll see the Test Drive Now button, click it, fill it out, use the promo code PREMARKET24. It'll get you a discount off the intro membership. Also, if you'd like to take advantage of all the webinars in the past and the ones I just described and what we have coming up in the future, you can use the promo code SPRING50 to get half off the Elite Annual Membership.
All right, thank you very much, Norm. Guys, let's take a look at our YouTube channel here. Make sure you follow us over here and look at this is this is our buddy right there, our pal. I mean, look at that sex appeal, man. Look at that. Look at that. When to swing. A must watch. A must watch.
The title is a little questionable.
Very questionable. Pun intended there, I think. Very, very questionable. All right, my friends, let's get to it. If you haven't done so already, make sure you hit the little bell too, because you're gonna notice Andrew and Artie go live usually with Brian in the office in Vancouver. So hit the bell here so you're notified when they go live. It's gonna be a couple of times in the afternoon throughout the trading week. So just kind of give you an update on what's going on, some of the positions they're in, and just the overall look on the market. Very, very insightful. And I think it's always great to watch those live if you can, because we usually never really go back to them like that. If you could catch it live, it's more meaningful. You can see what's going on there and make sure you stay up to speed. So let's get to it, guys. We are looking at Apple today, which again, not great right now, but they have the volume. We have Netflix on here, which is starting to drop again. How much downside do we have on Netflix, guys? It's going to be interesting. Are we going to get to that 200? If you look here, every day has ended in the red. We're trying to stay above this 210. We broke that yesterday. Can we continue down to 200 to 190? So it's going to be interesting for sure. They are not having no fun whatsoever. Last time they gapped down like this, right? They sold off for a couple of days, but they did get a nice little relief here, right? And then eventually ended up selling back. Are we going to see that in the next few days? So we'll have to see there. Here's UPS. Not a whole lot going on right now. I do like their daily today. They got a positive catalyst. Up 1.4. The volume is going to come in at the market open. We'll have to see how this is going to trade. So, but I really like the support that we have built down here. A lot of highs and lows, area of support happening around 187.50. So that could be interesting. Here's Ford. We'll look at that. And then we have Twitter as well. Again, I think we have a list that needs to get better, hopefully, before the market opens. But let's prepare for it. Let's do some levels. On Apple, we are looking at the highs and lows of the last 2 trading days, doing a pretty good job there. We're going to mark this high of the pre-market at 163.77. So we'll throw a level there. Oh, hold on. I was showing someone. I got to change this. I was showing someone yesterday in our class. They wanted to know how can they put the level and not show the line. And I showed them how to do that, but I forgot to switch it back on my end. So the way we did that was we went to trend lines. I got to bring this back now. Trend lines. Where did I do this? Config. No, this is not it. There was a way to. Oh, I think I double clicked it. So double clicking it. So yeah, I show somebody how to do something. Oh, here it is. Here it is. Config line. So let me bring this back. I just got to add the width here, and I got to add the color, make it red again. I think that looks good. Okay, there we go. If you're wondering how to hide your line for whatever reason, you don't want to see it, but you want to see the price, you can kind of click on the line, right click, hit config, and you got a couple of options to change the line style, whole bunch of stuff that you could do. I mean, this platform is just so customizable. It is incredible. If you want to do a specific level for whatever reason, right, you can also come in here and do the price, 163, exact number you want, hit OK, and it's going to move that line to that exact number. So, all right, so there we go. High of the pre-market, 163.77. We are going to look at the low of the pre-market over at 161.89. So we'll throw a level there as well. And I think you're pretty much set, guys. We got a lot going on down here, especially below the pre-market highs at the moment. Towards the top here, maybe you have an area here around 165. Looks like, right? You got a couple of days bouncing off of that opening, closing right around that area. So I think that's good level to have there, just in case we get going this morning. So we need a better day than yesterday as far as continuation, and hopefully today could be that day. Here's Netflix. I'm not going to add anything towards the top on Netflix. The last 3 days have done an amazing job here, and obviously this is also being confirmed there, right? So you don't need to add anything else. The previous day close, creating incredible support here. So, right, you got the previous day close around 210. I thought we were going to stay above that, but yesterday we did dipped our toes a little bit lower here to 205. You got a great level down there now at 205, and you have your low of your pre-market, which we are trying to hold as we speak, this 208.61. So 208.61, throw a level there, and I think you're all set on Netflix. You do not need to do anything else. If for some reason we start getting to 205, right, that's the next level we have down here. If at the market open or throughout the day today as we're trading, we start testing this level, then we can go to the left here, go all the way to the left. And it's been a while since we've been down here, and we can, you got to even go further back. We can get some levels towards the bottom of 205, but I'm not going to bother with that now. 205 is the next best level that we have in most recent time, right on there. You can also look at the weekly. You can look at the weekly charts as well to get a level that far back. It'll make it easier to get that far back on the weekly. Let's take a look at UPS. Again, not a whole lot going on right now, guys, and I'm not too excited about this list, but I'm excited about this week. 196 high of the pre-market. Towards the bottom, you got plenty here on the daily. Nice area consolidation happening here. Highs and lows for the last 2 trading days are providing some areas of support that we've seen over and over again. For example, this one right on here. Look at the support you're getting there. Every time we got to that level, we found an area of support there. So that's pretty nice. We did we gapped down yesterday a little bit and sold off pretty nice. But look at the recovery of this 183 level. So that was pretty excellent there. And now going into earnings, we're up a little bit, 1.5. Let's see how the market open is going to be there. Towards the top, let's get a few levels in here. Let's look to the left to get more data. Definitely like this level right over here. You got 2 days doing a nice bounce off that 198.65. Might actually be 199. Another area here. Look how much support you have there as well and changing direction. So that's nice at 204. So that's all you need for right now. Do not need to add anything else on UPS. We need that volume at the open. Here is Ford, as Norm mentioned. Their daily looks very nice, guys. You're just coming off an area of support right? This 1460 has been very good to them as far as bouncing off of that. Let's see if we can get that going today. It is not looking great right now, and actually might be more of a possible, but we'll see. We don't have much else to watch at the moment. 1541 high of the pre-market. We are also going to mark down this good level all the way up here. It's going to be 1638 on Ford. Got a nice area of support happening there that later became a little bit of resistance, as you see here and here as well. All right, we'll take a look at Twitter. Again, I agree with Norm 100% on this. I think the fun might be over. And yesterday we kind of saw some of this choppy price action over and over again, right? So very choppy price action. Even after the news broke out, you had the initial pop and then back to chop, right? So I think we're going to see a lot more of that on Twitter more often than what we like. So just be careful. It can still be a great scalping opportunity, but your entry has to be really good on Twitter. You do not want to chase Twitter. The drops are too aggressive. Your entry has to be very, very good on Twitter. Keep that in mind. Low of the pre-market, 5160 towards the top. We are looking at 5218. And then all the way up here, two levels I want to mark down, 5285. 5285. And over here, 5458. So I think you're all set there when it comes to those two. All right, so that's what we have, guys. Apple, Netflix, UPS, Ford, and Twitter. Looking forward to see what the moderators are going to put together, because my list could definitely use some help. But looking at their list, just not looking any much better than mine at the moment. So we're all on the same page here, guys. Not a blockbuster list, but that's okay. Not every day can be, insane. So, right, 911. I saw some questions here. Carlos, when doing levels, can you please do full screen? Yes, I have to set that up. We will do a full screen.
Idea. The only problem, we got to leave gappers up in the watch list.
That's why. Yeah, we got to put it in a way that this is bigger here, and we will do it, and we can still keep up the watches and the gappers list. So I just got to resize everything on our VMix. It'll take me a little bit to do that, but by this week we'll do it. We'll definitely do that, because I agree this is going to look a lot better. Any other questions we have before we get to our moderators?
So somebody asked a question, and it was a few minutes ago. I guess I'm getting old. Oh, somebody asked about share buybacks. Let me find the question. You able to give an idea of how to trade a stock when there is a share buyback, like in the case of UPS? So there's no, in my opinion, preface with that, there's no hard and fast rule how to trade it, because every buyback is a special different scenario. A newer growth company, for instance, if they're transitioning away from kind of startup or early phase of a company, and it's had a lot of big moves in the stock price, people might see it as a negative to have a stock buyback. I've seen that because it's not a good use of capital. Essentially, it's seeing a stock buyback makes you think that the leadership in the company thinks the stock price is too low. For an older, more mature company, it generally is a good thing. But if you see a company that's in growth mode doing that, then a lot of times analysts, banks, investors will think your capital, if your business really has that much potential ahead of it, why would you be spending money on buying back stock instead of R&D or investing in the business, your sales force, whatever it may be, to help grow the business more? So there's no hard and fast rule.
Yeah. I mean, that makes sense. I did not see it that way, but yeah, you're absolutely right.
And UPS is a mature business, so that doesn't fit the scenario I'm talking about. Mm-hmm. I'm just saying, in general, it depends on where the company is and a load of other things, but it's generally a positive catalyst.
Agreed. All right, guys, I don't see a lot more questions. So thoughts on CCL? Let's take a look at that. Why Twitter goes down. We kind of spoke on that a little bit. Norm did earlier. We can get into a little bit more in a second. But here's CCL. I don't think it's really in play, guys. I don't think the airlines or anything else is really in play today. This whole travel thing is kind of quiet for the most part.
So we'll have something that came out a few minutes ago, because they've got that pop there.
Yeah, they got this pop here.
Yeah, they just had news. Carnival CEO stepping down, will become vice chair. And then they named a new president and CEO. So they got a quick pop out of that, but not doing much.
Yeah, it's not scandalous enough for it to go crazy. So, okay, let's come over here, guys. I see our moderators lineup 914. As I am doing this and resizing this, please hit that thumbs up over on YouTube. We appreciate it. And if you're new to the channel, consider subscribing. We are live Monday through Friday, preparing you guys for the market open. We're sitting at 192 likes. Love that. And we'd love 250 if we can. That's usually our number.
If you want to see, so somebody said, what's that? Ouch, that's got to hurt your feelings when the stock price goes up. And you're the CEO when you left. That's the same as Redbox that we looked at earlier, and it's got a huge pop.
That's even worse. We've seen that a few times. There was one guy, I forgot, was it Piton as well? I forgot if it was Piton, but there was one guy that left.
Yeah, there's been a few.
And it's just, man, that's got to make you feel like crap. Yeah, this one is moving here, which is not, it might not seem like a lot on the charts, but you're up 13%. And yesterday you were up another 15, 20%. Yeah, you're going to feel like not so special. All right, guys, let's take a look at our watch list this morning from our moderators lineup. Looking forward to this because we need some ideas. Watch this: AMD, Disney, and Apple. Secondary list, we'll be looking for the pivot alerts there. Tiffany's looking at Apple, so you can see how small the list is today for our moderators because there's not a whole lot that looks great. Mike looking at Apple, Disney, and Facebook. Secondary list, Susan looking at Apple, AMD, and NVIDIA. Secondary list, J&J there. Dima's looking at Baba, Oxy, and Apple. Jared, UPS, MMM, RTX, and a couple of above from the watch list and scanners. IPOs for today, none. A couple of SPACs, you can see those two there. And Peter's list, AMD, GE. Secondary list, UPS, Apple, and Ford. Megan will be looking at Oxy, Ford, Twitter, and CSCO, that's Cisco. And AIM in potential longs for today, Oxy and LNTH. Let's see if he has potential shorts. If not, I think that's all he's looking at for the most part. So, guys, thank you so much for joining us over on YouTube. Yeah. We appreciate it very, very much. We almost got to 250, so thank you for those that are always supporting. We appreciate you guys a whole bunch. You're always tuning in. CFC, thank you guys. KN, thank you for joining us. Nora, Stock Pigeon, Sergio, guys, thank you so much for being part of the YouTube community there. Ben, as usual, always online. We appreciate that very, very much. Guys, take care. Trade safe. Again, remember, our list today, I just want to remind you guys, our list today is not looking great. So you got to be a little bit more patient. Yesterday I had two small trades. I lost like $97 and I knew right away, okay, today's not going to be my day. I stopped trading. So it might be one of those days today again. Hopefully not. Hopefully that's not the case. But know when to stop trading, right? Do not force something that is just not happening.
Or tweak your strategy. That's another thing. I do both of these things. I either, day like that, you either, stop trading. I usually get to a more scalpy mentality. Yesterday, I traded Apple inside the range and just got all in, all out. And, it worked because I felt it was going to be choppy until it, broke out a little bit later in the morning. So anyway,
agreed.
Trade smaller, any of these things.
Yeah, so many things you could do. So many things you could do, but just don't keep doing what's not working. That's what you do not want to do.
No, guys, you don't want to get stubborn.
Yeah, exactly. Guys, take care over on YouTube. Norman and I are going to continue here in the chat room. Brian coming in with his list, and you can see how small his list is today. And his list is actually tickers that we haven't looked at here. Actually, no, we did. Oxy, NKTX, the low flow that was hot yesterday, and GE. When you see Brian put a list like this, you know that he's not liking much today, but he's throwing something out there that can hopefully get going. So, guys, stay safe. We will see you tomorrow. Tonight, amen, 5 p.m. Eastern time. Do not forget the man with the extremely sexy thumbnail on YouTube. So make sure you take a look at that. Very provocative situation there. So take care, guys. We will see you tomorrow.
Take care, guys. Trade safe.